In this video, we will look at Google, or more technically correct, Alphabet. We will look at the recent quarterly report. It was available on July 26th. So this is the second quarter, ending on June 30th. So we will look at some of the numbers of Google. We will look at their revenue, their operating income, their number of employees. And in the end, we will update our fair value calculation to see what kind of upside Google stock offers. So let's get started. First of all, if you want to get updates about Google, you can subscribe to the channel by pressing the subscribe button under the video. You will not miss a single new video. Okay, if we look at the chart of Google, we can see that the stock is down around 18% from year to date, and the stock is up around 10% right after the report was available, right after the second quarter report was available on July 26th. Let's look at this report. First, let's look at their top line number, the revenue. We can see that the revenue was up around 13%. We can see that it was 69.7 billion, an increase of 13% from the same quarter 1 year ago. What are the main segments that brought the revenue? Of course, the main segment is Google Search. It brought 40.7 billion. According to the recent conference call, the growth in this segment was mostly due to traveling and retail. So these were the main drivers of the growth. YouTube ads brought 7.3 billion. There was almost no increase in the revenue in this quarter. According to management, this was because the first quarter was better than expected for YouTube, and Google Cloud brought 6.2 billion. Also, if we look at their operating income, we can see that only Google ads are profitable. So, for example, Google Cloud is not yet profitable, but it may also change in the future, and it may be a great driver for future growth for Google. Also, if we return to the first slide, we can see that Google increased their number of employees from 144,000 to 174,000. So, significant increase in the number of employees. Also, according to management, this was the source of significant increase in research and development. So the number of employees increased significantly, and this increased the research and development expenses. So to constantly improve their products, Google has to spend on research and development, and these expenses are getting higher and higher each year. They increase the number of employees significantly. Also, one of the most significant risks for Google is regulation. For example, if several bills are passed, Google can make less money on ads. I have made a separate video on that. I will link to it in the end. An important thing to note here is that regulations can seriously impact Google's growth. Okay, this brings us to their fair value calculations. We will use two valuation methods. One is discounted earnings method, the other is free cash flow yield method. So first of all, we need the growth rate. Analysts are expecting for the growth rate for Google in the next 5 years to be around 12%. So this is lower than in previous quarters. As a result, we will use lower price to earnings multiple. What we basically do is that we take current earnings per share, grow them using the growth rate, 12%, multiply by future price to earnings. I use price to earnings as double the growth rate of 24. Then we discount them back to today using the required rate of return of 10%. We adjust for net debt. As a result, we get the fair value of Google stock of close to $147 per share, which implies around 25% upside. So according to this method, we get 25% upside. So Google stock, according to this method, is 25% undervalued. Okay, then we will use the second method. We will use free cash flow yield method. This is something that is used by Terry Smith in his analysis. So what is free cash flow yield? Is next 12-month free cash flow divided by market cap. So the current free cash flow yield for Google is 4.87, while the average for the last 3 years is 3.92. So from this method, we also get a 25% upside. So for both methods, the discounted earnings per share method and the free cash flow yield method, the fair value is $147 per share. So according to both methods, Google offers around 25% upside. Okay, I like the fact that even though Google is a maturing company, it still offers a significant growth rate of around 12%. According to our calculations, it offers around 25% upside. Also, it will be very interesting to see what super investors that I'm following bought the stock in this quarter. This info will be in 13F filings that will be available in a couple of weeks. Also, if you want to know more about the regulatory risks for Google, here is the video. If you are not subscribed to the channel, you can do this by pressing the subscribe button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.